All right, guys. Hold on. Give me a second. Okay. All right, we're good. All right. So this is going to be a case study about how I passed this My Funded Futures 150K count in 2 weeks using a simple risk management strategy as well as model. Right. Your risk management, while it can vary in terms of how you trade. Are you a swing trader? Are you a day trader? Are you a scalper? This is just a simple approach to risk management that I find that helps me, and I don't really need to use as much math. While it is helpful to use it, this is just the most simplest approach that I can get, and this is how I manage my risk on a account. So let's get into it. So our agenda for today is we're going to go over the risk management strategy, the model I used, and then we'll go jump into some live chart examples. And yeah. All right. So risk management strategy for success. So as you can see, this is my dashboard on that funded account. I did have 3 more trades for this, but if we go into my funded futures, I can't really look at my stats anymore, considering that I still need to pay my activation fee, which I will very soon. But all right, so yeah, so I can pull up my stats for you guys. So as you can see, throughout this trading day, we have a pretty good overall look on the trades. So as you can see, first trade of the day, our first trade on this account was pretty bad. Took 7 trades, around $2,273 lost. But at the end of the day, I trusted my risk management strategy, and I knew that this model would play out in the end. So as you can see, we have a total of 19 trading days, and I have won 16, and I've lost 3, right? So some takeaways that we can get from the losses is over trading. So as you can see on this one, I took 7 trades, which is usually more than I would take compared to the rest of these. And then this one was 10 trades. So if we go back to the case study, we'll pull it up again. The risk is 1 to 2 contracts. Number of trades vary, such as high probability news impact days, meaning on high probability trading days where we have lots of red folder news, I will be looking to take more trades, and I'm aiming to reach 500 to 1,000 per day to reach 9K profit target, right? So simple but effective. If you win 2 trades, usually finish the day unless a setup presents itself again later in the day, right? If I lose one, you can go back half risk, and if you lose the second, finish for the day. This is a very simple approach as to risk management, and using 1 to 2 contracts on a 150K is very low risk, but you can still achieve big results if you know how to trade, right? You don't need to over leverage and do all this horse shit where you just essentially blow your account. That's the fastest way to blow your account. You need to understand that risk is the most important thing, right? So we'll go back into the stats on this account. So my best trade was about $1,000. Average loss is very low. So $200 average loss on a 4,500. Pretty much. It's not a 150K. It's 4,500 dollar account. 103 trades over the course, 149 contracts with a 45.63% win rate and a 1.75 RR, right? So I'm mainly, like I said, your risk management varies on the type of trader you are. So like I said, I'm a scalper, right? If we go back down here, you can clearly see I'm in these trades for very little time, right? 6 minutes, 3 minutes, right? Both of these days on Friday, I ended up in profit, right? One 520, one 445, and that was the cap off my account, right? I'm in these trades for not that long, 10 minutes, 1 minute, 54 seconds, 2 minutes. I'm scalping these markets, and that is what I've found to be the best for me, right? So let's jump back into the slideshow. So we'll go back here. So this is the model that I use. This is what I like to call the 15-minute model. This model helped me by a couple of my friends and developed a little bit deeper, kind of like Romeo, how he does it. But you can see over here, the account 159,019, and these were the 2 trades that I took on Friday, May 10th. One short, and then we'll go over these examples, and then one long. And as you can see right here, I exited these longs at the same time I exited short, 18,255, 18,255. Which was actually a mistake, but it's cool to just like look at that. But how this model works is you're going to start by fractalizing your time, right? So start by breaking your 4-hour candles, the higher time frame, into 4 consecutive 1-hour candles. Examples 10 to 11, 11 to 12, 12 to 1, 1 to 2. You're going to identify the second or third hourly candle within that 4-hour time window. So if we're using 1 to 5 on Forex as our 4-hour, then we can start from 9 to 9 to 1 p.m. for Forex as well, right? So you can use the second, or considering each candle has its own respective kind of movement. So you have a classic expansion, you have an accumulation candle, or you can have a retracement candle, right? You can kind of like you can kind of take the logistics, and you kind of understand that, okay, well, if this 4-hour candle is likely to, create this range, then I'm expecting within the first 2 hours of the next 4-hour candle, we're going to take that range, and you can find a trade off of that. So the 4-hour time windows and the 1-hour time windows that I like to use the most to trade this 15-minute model is 9 to 10 o'clock, or the 10 to 11, or 11 to 12. Those ones work as well, because those are your highest probability candles within that 10 to, if we're talking futures, 10 to 2 o'clock 4-hour candle, right? So then within that 1-hour candle, what we're going to do is we're going to identify 4 15-minute candles that lie in between these hourly candles. Remember that time is all fractal. You're going to wait for the first 15 to 30 minutes to create a range, then wait for manipulation in the opposing direction of the range with order flow. So if we're bullish and then we see price then dip below an old low, then that's how we know that's a shift in the opposite direction to induce traders into selling there, and so we can continue higher, right? The reason why you want to wait for the first 15 to 30 minutes is because you want to think of the hourly PO3. So if we have an opening time, then we can expect that the first 15 to 30 minutes is going to create some sort of range. And remember, ranges do not always have to be in a up and down formation. It can be an upwards accumulation. It can be a downwards accumulation. And what I want you to understand by this is that the pattern traders, the retail traders like myself, I'm a retail trader, but just the people that don't understand ICT, what they don't understand is that they see a bull flag, right? A bull flag is a down trending accumulation, meaning that price is going down, but it's only staying in a tight range, right? Then you have your bear flag, or your bearish pennant, where it goes upwards accumulation, and we like to fade those, right? So then what you'll do is you'll wait for a manipulation in the opposite direction with order flow with SMT, and then trade the opposing end of that opening range. So let's say it creates a 15 handle opening range, right? And let's say it dips 5 handles below. Then we're going to target those 20 handle, that total 20 handle range as our take profit, right? So we'll target the opposing end of that opening range, and then we'll target equilibrium of that range as the first target, and then the opposing end of the range as the second. So here's some disclaimers / discretionary approach when trading this model. Is it must be in direction with the high time frame order flow, such as breaking highs, rejecting lows if we're bullish, or breaking lows, rejecting highs if we're bearish, right? Must be 15-minute time frame SMT, not 1 minute. You're going to be tripped up by 1 minute SMT. And yes, well, I said time is all fractal. The SMT that you want to see is going to be on the 15-minute time frame across all 3 indexes, or euro, dollar, euro, GBP, DXY, whatever you trade. And you must, for this model, for me to see the highest probability, is there must be an established opening range beforehand, right? Like I said, during the opening of candles, there's some times where it will classically expand depending on what the previous candle did, right? If we're in a range, if we're in a trending day, and let's say 10 a.m. automatically shoots up, right? Then we can expect 11 to 12 to sort of retrace, generate more interest into the market on both sides, accumulation, so in terms, and then wait for a continuation of that setup through turtle soup, right? Must include DOL and narrative. This is not mechanical. However, it does appear every day if you know what you are looking for. If you consistently just focus on the 15-minute and then take your entries on a 1-minute fractal off of that 15-minute, your win rate will go up and you will win more trades, right? So that is it. We'll jump into some chart examples next. All right, so first of all, I had a couple people in my Discord. By the way, I will talk about that later, but I had a couple people in my Discord that I've just recently created with my good friend Jalen. I'll put his links in the description. Phenomenal trader. He's been someone who I've been helping with and teaching for quite a bit of time. Anyways, I'm gonna stop the app, but I'm gonna just go over these trades that I've taken. So right here, this long. So this long was pretty simple to me in terms of that. What I was looking for, while I did say 1 minute SMT is not going to be the best thing, it can work if you are breaking down the 15-minute candles, right? So as you can see, this is our 10 a.m. So this is our 10 o'clock open right here. And notice how there isn't an opening range, right? So we're just gonna mark that first, because like I said, based on what the previous candle did is what the next candle will do. So if this is our 9 o'clock candle, we can see that this 9 o'clock candle is purely manipulating, right? Or it is reaching up above the 8 o'clock, right? So if we have our 8 o'clock candle, this is our 8 o'clock candle, downwards accumulation. You see this downwards accumulation? This is still a tight range. This is not a big range, really. This is not displacement. This is just generating interest downwards. They're accumulating downwards. Next, you can see 9 a.m. sweep. So based on the respective 9 a.m. sweep and a failure to come above this April 15th high that is from April 15th, you'll understand that 10 o'clock is going to displace if we have a strong sell side draw on liquidity, which is our Asian lows, right? You can see this, you can see these smooth edges. This is our draw on liquidity, our Asian lows or our previous session lows, as well as our midnight open, right? Notice how we have little to no wick below the midnight open. So then we can understand that 10 a.m. is going to distribute if 9 a.m. manipulates. Now let's say for the opposite, let's say 8 o'clock manipulates, then we can expect 9 o'clock to distribute. Right? The cycle repeats itself over again. Market cycles, right? So the reason why I took these shorts is that we are in bearish order flow, right? And what do I see? Right, 1 minute SMT, I said don't use it, but this is in accordance with order flow, so it will work, right? You can see the 1022 candle creates a higher high, while the 1024 candle creates a lower high on ES, but a higher high on NQ. And this SMT inside of this fair value gap is what prompted me to short to an obvious target. And where is that obvious target? Our midnight open, which is this yellow line. As you can see, midnight open is this yellow line, right? That is a easy draw on liquidity. So this is kind of your kiss of death, right? Your turtle soup inside of a fair value gap with SMT. Now this is not the model, but this is just some confluences that I'll like to use when I'm trading, right? You can see turtle soup, SMT inside of a fair value gap, inside of a mitigation block as well, right? So that was just an obvious short to the draw on liquidity for myself that I will take 100% of the time. Now for these longs, however, we can see that when 8:30 opens, right? Let's replay this back. And then we'll throw on our PO3 indicator real quick just to show you guys. So when this opening range happens, I like to turn on the 30-minute candles, right? So what I mean by this is that once this range is established, I like to use the respective open to then identify, right? So then if we're expecting a retrace or reversal, right? Because like I said, we want to see an opening range happen. So this could be an opening range, right? We see then at 10:30, we see a sweep in the opposite direction, right? Boom. You can see a sweep in the opposite direction with SMT below the midnight open. Now, while this trade did work out, it was not a good trade whatsoever, right? You can see here ES makes equal lows, right? It makes equal lows between here and here, and that's a form of SMT, while NQ makes a lower low. You can wait. You don't have to expect these equal lows to be traded into immediately, right? It's going to wait until it hits its target, which in this case was this high. You can notice how ES runs up towards it, but NQ kind of stays lower, which is a bearish signal. So whenever you enter on SMT with this model, if you see SMT anywhere near these respective highs, you want to make sure you manage your risk accordingly. You move your stop to break even. You take partials at equilibrium of the range of the previous 15-minute candle. So if we look at the previous 15-minute candle, you can see price reaches into that equilibrium. From this low to this high, price reaches into that equilibrium and automatically falls off. That's why we want to have our take profits at equilibrium, right? So that's why I took this long. You can see 9:30 opens. We have a sell side sweep, meaning that smart money is buying the wick, essentially. We're entering inside anywhere between this open to low, SMT below the open, and we're going to target 50% of the previous 15-minute candle range, right? So those are just the breakdowns of those two longs that I took. I'll put this back in full screen. So you can see sell one with that SMT inside. I'll take profit. I didn't exactly take profit at midnight open, but I would because I was trying to just pass this account. So I'll take base hits for then. And then you can see I took longs right in this candle once we closed above the turtle soup. So about about 30, no, 50 points in total, I would say. No, 60 points in total, I would say, which is good to aim for pretty much each day. Anywhere from 50 to 60 points, even 40 points is good enough. But we'll jump into a example which I was calling live in front of my in front of one of my live streams this weekend, which was happened, I believe it was on Thursday actually. Yeah, sorry, Thursday. So we'll talk about this real quick. This one was a very good model, right? So 4-hour candle, right? Let's mark our 4-hour candle, okay? Let's go over here. So if we're going to look at Thursday's price action only, let's only do this. Okay, so this is our Thursday daily candle. You can see we have our 6 p.m. open right here. 6 p.m. open. So you can see going into, if we go on the hourly chart, you can see going into 7, into 6, into 8 that we have our hourly candles within this within this 6 to 10 a.m. section, right? So 6 a.m. to 10 a.m. Okay. Now, what do you notice within, if we fractalize this even more and go on the 15-minute, right? We have a clear kind of accumulation, manipulation, distribution, and then we have a continuation, right, back into the highs of the previous day, as well as these original accumulation targets, right? So you can see here, if we go back on the hourly, what I was talking about on my hourly ranges video is that we have 8 a.m. range, 9 a.m. sweep, and then on that sweep right here, you can see ES fails to take 8 a.m.'s low. So now, using the logic that we have just learned, then we can go back and we can see, okay, if 9 a.m. manipulates, 10 a.m. will distribute. If 8 a.m. creates a range, then 9 a.m. sweeps the range, then 10 a.m. will distribute. This is narrative. This is market painting a picture for you, telling you a story of what they can't hide the wicks. They can't hide the bodies. They can't hide them filling in the bodies. They can't hide it. So if you can understand how to read these candles, you will unlock the secrets to the market, right? You will be able to be profitable and achieve winning streaks of winning days, like right here, right? You will be able to win multiple days. Look, listen, I don't care what you say. You can say, oh, well, you lost some trades that day. I don't care. It's about how much I have at the end of the day. It's about how my account fares at the end of the month, at the end of the week, over a large period of time. That is profitability. It is not, oh, I lost today, I'm unprofitable. No. With that mindset, you will be unprofitable. It is about the course of days. Look, I'm taking multiple trades here. You can see it clearly, but that's what it's about. It's about the total impact you can make over the span of a day, over the span of a week, over the span of a month. But going back into it, so with that premise in mind, then we can move on to our 9 to 10 o'clock candle, right? So moving on to the 15-minute, what we are going to do is we are going to wait for a opening range between 10 o'clock to 10:30, right? So let's mark out our 10 a.m. candle to our 11 a.m. candle. And what can we see? What can we see here, right? This is a range. Do you see this range? This right here is a range. This 15-minute candle. Let me turn off my ICT everything right here. So right here, you can see we are generating interest on both sides. We have a wick that is being heavily we have a wick, a large wick, and we have a small body with a small wick resting below it. This is a range. Now, what can you expect, right? Same here on ES. You can see this as well. You can see that when these candles open, the high and low is already predetermined. It is already predetermined. It's already coded. It is already quantified at when and where this will happen, right? So 10 o'clock creates a range. You then see 10:15 dip below that opening range, and then you see ES does not dip below that opening range. So this shows us that we are bullish, right? And you don't even need to watch the 1 minute. You can, but when you're just understanding this model, you can understand that you'll wait for 10 o'clock. You will watch that whole 15-minute sequence play out. You won't be caught on the 1 minute trying to wait for an entry that's not going to appear, because SMT only appears at certain times. Notice how, yeah, sure, we have SMT here, right? You can see this SMT right here. ES takes these highs, the 9 a.m. highs. It already takes the hourly, but that doesn't matter. People who are trying to short this SMT inside of this fair value gap are going to get messed up because they don't understand when SMT truly occurs, right? So this 15-minute candle, if we go down back to the 1 minute, you'll see right here that this is our, we'll mark this out again, into our 15-minute quadrants, divisions of time in a high time frame candle. And you can see how every piece of price action plays in these 15 minutes. So this is our low of that 15-minute candle. And then what do you see? You see SMT right here. I called this in my server. I will pull up the video and I will post it as well as a recap. But we basically went over all this price action. I have 2 trades taken on that day. But you can see right here, 10:15, right? This is our open of 10 o'clock, and this is our low of 10:15. Right here, this is now the 10:15 to 10:30 candle, which is our second 15-minute candle. And as you can see, it sweeps the low. SMT, it does not take out the 10:15 low. It does not reach into it. And then what happens next? You see the sequence happen, which Romeo likes to call. You see the order block. So these down closed candles, once they are closed above, it is known as the order block or the breaker block. Low, high, lower low, higher high. Tap into, where do we tap into? The 25% level of this order block, signifying that price is going to head higher. It is respecting premium of it, meaning that we are going to head higher. Notice as soon as this happens, 10:30, what does it do? Automatically displaces. This candle not creating a wick here is meant on purpose. You will not expect this candle to be traded back into because this is when the buy program is activated in a market maker sell model or buy model, with this being our original accumulation that we are looking to target, right? You have your SMR right here between the 10:15 to 10:30, and you're good. You see a opening range be established, generating interest on both sides, which most people are going to get caught up in. They see 10 o'clock automatically open. They see SMT above the open. Oh, well, like, because I made the same mistake. They see this SMT right here, and they're like, yeah, let's short it. Yes, while it did work, these shorts, it's not the true SMT. This is the true SMT, and it only works at certain times. And this is why I'm telling you, you need to make sure that it's also that you can see it on the 15-minute. This SMT you can see very well on the 15-minute, right? And this is, you don't even have to use the 1 minute for this. As soon as we close above the open of the previous candle, look at how prices were filling it. You can get your entry anywhere within this candle and trade it into this high, trade it into equilibrium from this high to this low, or from equilibrium from this high to this low. And that is a model that you have right there using Romeo's 3-candle model. But notice how he does not teach you that you can break this down into fractals from the daily, from the 4-hour. You can break down the daily into, I've talked about this, divisions of time. I highly suggest, if you guys don't understand what I'm talking about, you can go reference my past video. But anyways, this is just stuff that I'm all teaching in my Discord. I'm all helping a bunch of people for free, 100%. I will pull it up for you guys right here. So this is the Solaris Lab Discord. It has just been started, but I usually post my analysis in here. So, for example, just to show you guys, if Monday opens, Tuesday should continue. Looking tomorrow, trade up into this high and potentially into true year open. So overall, during this week, this was my draw on liquidity, right? I was expecting us to come reach into this high. Now, if we go back onto the charts towards the, if you go on the 4-hour, on the daily, you can see that we are steadily approaching that target. You can see, actually, we did approach that target. I was in market replay, right? So we pretty much created equal lows or equal highs, aka engineered liquidity up here, meaning that I 100% expect this high to be taken at some point, considering how close we are to it, right? So that's something that, you know, I like to, when my goal with this server is I don't want to give you guys signals. I don't want to give you guys call outs. I want to give you guys a draw on liquidity and understand that only taking trades in direction of where the weekly candle is going to print will make you profitable, will make you money, right? Trades like this, these turtle soups, they will happen, right? These happen on the 15-minute candle and as well I will be posting the trade execution video, which is on my Twitter as well, right after this, and show you guys some examples of the 15-minute model that I used live, right? Recorded live.
Mama cried when we arrived, I promised her I'd be okay. Way too tired of lows and highs, I guess today could be the day. Yesterday made me upset, best if we go separate ways. There's pressure building in my head, but still some shit I never say. Maybe I misread the situation, or maybe it's exactly what I'm thinking. Lately I've been tired of staying patient. Don't need to say it, I just need some confirmation. We're running circles in my head, man, you can't even know the hell. I'm so uncertain about what's next, but I don't need to show you that. I see it working in your head, but you don't think I noticed that. I think the worst part of this is that we won't never show each other. I guess that's your decision. Fuck it, it's your life. Should I stay insistent, or should I let it slide? I think I go the distance and keep my head up high. Feel like I'm inches from the finish, but I'm nowhere near the line. Soon as my head hit the pillow, toss and turn, I can't manage. I'm moving fast in this rental, rubber burning, finna crash out. Rubber bands make my hands hurt. Giving statements away to them fans, they is friends now. Maybe I misread the situation, or maybe it's exactly what I'm thinking. Lately I've been tired of being patient. You never said it, I ain't need it anyway. I do this for them kids who need a break. I do this for them kids who think nobody got they back. You won't never fess it up, it's such a
live, right? Recorded live. So yeah, I'll put the link in description for Solaris. You guys can join. I'll be putting my data collection, which I've been working on for the past 2 months, inside of here. And then you guys can ask me questions. You guys can send your executions. I can rate them. We have Jalen right here sending his executions. Great trades he's been taking. We have Chains over here. Some guy that's helped me a lot in my trading. And yeah, I really hope you guys can find some value in this video and understanding, you know, yes, while you guys are going to be like, oh, well, where's the payout? You know, yeah, I will update you guys if I get the payout. While it is a different beast, I will be hoping to milk this 150K for everything it's got. So I hope you guys really enjoyed this video. It might be a little bit longer than I expected because there's a lot of things I need to talk about since I've been away for a while. But please make sure you guys hit subscribe, and I'll see you guys in the next one.